Why is Vice Media going bankrupt? After almost 30 years in business, Vice Media Company has filed for Chapter 11 bankruptcy, a legal process that allows businesses to restructure their debts while continuing to operate under court supervision. Since being founded in 1994 as a niche magazine, Vice Media Company grew into a complex business with its own TV channel, film studio, fashion magazine, online news media, and creative agency. The company catered to a diverse and youthful audience, often referred to as millennials and Gen Z, generally tech-savvy, connected youth who value authenticity, originality, and Vice's unique, often countercultural perspective on climate change, human rights, social justice, and culture topics, known for their provocative and conversational tone. Vice was once valued at $5.7 billion, but now it will likely be sold to Fortress Investment Group and Soros Fund Management, who bidded for $225 million to take on significant liabilities, listed at $500 million to $1 billion. It is expected to end the sale in the next 2 to 3 months. Both parties agreed on a stalking horse agreement, a one when a potential buyer is in place in advance of a bankruptcy filing. This would give Vice a relief from its debt load. Vice's head stated that this bankruptcy sale would ultimately strengthen the company and bring a new successful chapter for Vice that has fired 100 people and shut down Vice World News and Vice News Tonight TV program a few weeks before and changed the CEO in February. So what caused such a decision? There's no obvious reason, but it's worth mentioning that Vice Media has received a lot of money from big companies over time, and now those debts are a bit complicated. Companies like A&E Networks, Disney, Adobe, and Fox are hoping to see some profit from the money they put in the Vice Media. It created a closed cycle. Vice couldn't pay back, so the company went for more investments, even though it tried to sell itself multiple times. For example, Group Black, a company investing in Black-owned businesses, offered to buy Vice for $400 million in March, but they never closed a deal. Social media networks like Facebook changing their advertising algorithms might have played its part too. Knowing social media was always a space where outlets like Vice once reached the majority of their audience. Vice Media also received criticism for blurring the line between journalism and advertising, overstating its online viewership numbers, and excessive expenditures. The company also had to undergo a broader restructuring of its news division and even cancel popular programs, indicating operational challenges. Vice also had a shaken reputation for Me Too allegations for some time now. A few years ago, several reports emerged, highlighting instances of sexual misconduct and an inappropriate work culture within the company. They conducted internal investigations and made personnel changes, but it made a significant impact on Vice's image. But Vice Media is not the only media outlet that struggles to stay in business. The Pulitzer Prize-winning digital news website BuzzFeed News, which is a part of the BuzzFeed company, is also being shut down due to advertising spending and financial challenges. Recently, the company has cut its workforce by 15%. The company's CEO, John Peretti, also pointed to a pandemic, tech recession, tough economy, declining stock market, and ongoing audience shifts as the main reasons for closing. While this bankruptcy marks the end of an era within the Vice Media, only time will tell if this filing will lead to a successful and revitalized chapter for the company.
Why was he gone? He was such a nice guy. No, he was not. He was a total douche. Doompa-dee-doomp.